The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Steve Rhodes coming to you live. Well, oh, shoot, that's the other one. Welcome to the November 12th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. That's right. If you're listening live, thanks so much for doing that. And if you are listening to the recorded show, I'm going to try to make this as pertinent as I can for you. Of course, if you are listening live, I'd love to hear from you. You can give us a email. You can't give us a call, but you can send me an email and send it out to Steve at TFNN.com. And in that subject heading, please put radio show question. Of course, if you're inside the Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our morning at 8:08 with U.S. equity futures trading to the downside. S&P's off 8 points. NASDAQ's down 26. Dow's off 42. The Russell's down 13. If we take a look at what transpired over in Asia and Europe this morning, it's a sea of red out there. You have the Shanghai off 50 points. The Hang Seng down 580. Nikkei off 157. The Asian S&P 200 is down 11. FTSE's off 74. DAX is down 214 points. We'll certainly take a look at those charts this morning, see what they're communicating to you and I. Metals, we've got gold's off $2 right now. Silver's up a nickel. Copper's off a nickel. Platinum's up off $8. Palladium's down 15. Light sweet crude up 51 cents. Natural gas is off a penny. U.S. dollar index is up 263 ticks out there. Euro's trading down. We're going to take a look at the equity futures, the currency pairs out there. In the debt market, you've got the 30-year trading out at 117.12. That's down 9 ticks. And 10 years out at 109.24. Now, I was throwing a curveball. You know, everything's happening for us. Well, for Stevie this morning and for you, what's going to happen is we're going to look at naked charts. No, I've got my clothes on, and the charts do as well, but I'm missing market profiles. They're having a problem this morning. I should never have rebooted my system. But I rebooted so that I could be more efficient, and now I'm going to be a little bit less efficient. So maybe during the show, those things will come back live. But we're going to do a show here with a naked trading. Now we're going to have all my other indicators, just not those TAS market profiles. And the problem with my white background charts is that because I have that indicator on there, every chart I would show up, you'd have that a bottom line at like zero, like a flat line, so to speak, out there, which really screws up the chart. So I didn't find this out until 5 minutes to airtime out there. So Stevie was working his butt off trying to figure this out. So let's do this here. Let's take a look at what went on over across the international markets last evening. So we're going to switch from this black background screen. We're going to move over to the white background screen. It's probably where we'll park most of our time today. Of course, you can still send me requests out there. We can still take a look at instruments. I'm just missing one of those real key tools out there. So let's start with taking a look at the Shanghai index. What do we know about the Shanghai? I'm just simply going to open up each chart. That way we are all talking and looking at the same thing out there. So if we take a look at the Shanghai, this top with a TD9 count top, that's after the nice Chinese stimulus. Pretty cool. This formed a TD9 count bottom back on September 18th. So before the stimulus was announced out there, boy, that would have been a bonus. And now we had a TD9 count top, took price right back to support, and support being that oscillator and change line. Right now, today, we closed last night below that. I do not have any kind of a topping pattern. Of course, that TD9 count is the top out there. As far as retracements at best case, it might be a 782. It might even be above that level out there. But price closing below a green oscillator and change line tells us that price has lost its momentum. So this may lead, it's still bullish, but it's lost its momentum. And so this could easily lead, because price is below that level, to a further retracement out there. Further retracement to where? Well, I mean, if it's a real retracement, it would be targeting its swing point from October 30th. But I'm not saying that's what's going to unfold. In the case of the Hang Seng last night, the Hang Seng had been trading in a sideways move for a couple of weeks out there. So you can see the sideways-ish move out here. And then this morning, what price did is it closed below that sideways consolidation, so to speak, closed below the swing point from October the 17th. And that has triggered an A to B equals CD down pattern. Now, the initial price projection, somewhere around 18,116, but I would say more likely than not, price would target its breakout level at 17,177.08. So that's the current pattern on the Hang Seng. Only a close back above its green oscillator and change line. Really, it'd have to be the close from a couple of days ago would negate that signal. We take a look at the Nikkei. Nikkei 225. Pulled back last night by 157 points. That was nothing more than a test and a rejection of that green oscillator and change line. So it remains bullish out here. Now, where price has been struggling is inside this gap to the downside. That's between the day of October 15th and October 16th out there. So that's what's going on with the Nikkei. Let's go take a look at the FTSE. The FTSE likely going to go ahead and, now I don't know this to be the case for sure just yet. The FTSE, I believe, closes at 11:30 today. Now that we're back on regular Eastern Standard Time out there. And if price closes below its TD9 count bottom, that's a trading day of October 31st, the low out there, 80.7172. If price closes below that, that's going to trigger an A to B equals CD pattern to the downside. That'll take us back into the swing point on a daily basis from back in August. And so the one-to-one price projection around the 79, 75-ish area. But we are inside the swing point here. We've been inside the swing point for about 4 or 5 trading sessions. Again, that's the August 5th swing point. It may be that that's the real price target, is the low of that at 79.1594 out there. But nonetheless, looks like we may get a trigger an A to B equals CD pattern to the downside for the FTSE. So that's what went on overnight internationally. I'm going to go ahead and button this up here, close this set of charts out there. So that takes care of one of the requests that came in earlier, which was specifically about the Hang Seng index out there. Now what do we want to do? Now what we should do is wait for this to populate. Again, I've got no profile data, but we do have all my TD9 counts and so forth. And what are we looking at right now? We're looking at the ES Mini. So in the case of the ES Mini, while this is still populating here, it looks like we're good. So let's take a look at the patterns that have bottom signals out here and try to figure out what they're doing. So the first bottom signal, this is on our Tom O'Brien, his favorite time frame chart, the 10-minute time frame chart out here. We're going to go ahead and open that up. And so we can see that this formed, let me get my cursor out here. Go back just a tad in time. Yesterday at 13:30, 1:30 in the afternoon, we had a nice 10-minute TD9 count bottom pattern that formed out there. That led to a rally. Why did it stop where it did? I'd have to go take a look at the other time frame charts to see why that rally ended at 4 p.m. last night. And then simply move sideways and finally move lower. Now, at about 5:30 this morning, when we come back to this break, we'll take a look at that. I'll check on those market profiles. But at 5:30 this morning, we had another TD9 count bottom pattern. Where is it that you think price is headed on the ES Mini? If you look at the 10-minute chart, we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tighter Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, folks. So we're taking a look at the ES Mini out here, currently traded at 60.24. ES Mini's down 7 points as we speak right now on the daily time frame. So we can see here, let's take a look at the tools that we know here at TFNN. First, we got a nice TD9 count bottom pattern that completed at 550 this morning. That led to a rally. Price was able to take out that red oscillator and change line. At that stage, that was suggesting we should move to its breakdown level. So 60.2975 is its price target. Now, let's take a look at other tools out here. We can see that we got to wave number 4. That's letter D on my screen out here. And that was at 7:50 this morning. That was confirmed at 8 a.m. So as Basil has taught us, once you get to that 4th wave, the market can do and is likely to do something else. Well, in this case here, it was nothing more than a test of support at this stage of the game. And support being that red oscillator and change line. Now, a red oscillator and change line, by being red, tells us that the price oscillator itself is below 0. And so not as strong as a green oscillator and change line where the price oscillator would be above 0. So what you should be doing, whether you're long or short out here, you should be watching that oscillator and change line. If price were to close below the 60.22 level, that would be telling us that we're going to head lower. Lower would be at least targeting that swing point from 5:30 this morning. Out there, that price range being between 60.12 up to 60.1875. As long as price holds that oscillator and change line, we've seen in the last 10 minutes it's been testing it twice out here. We're going to get to the second one's going to close here in less than 60 seconds. As long as that level holds, price should go target 60.2975. Maybe it's 60.3150 or even 60.3675. Those are 10-minute TD9 count breakdown levels. So that's one pattern. That's on that 10-minute chart. If we look at a 15-minute chart, you've got a Rhodes momentum indicator bottom. You had that wave number 4, letter D. Price pulls back in that last 15-minute bar, tests and rejects that oscillator and change line. Its signal to us is it wants higher price as well. The resistance level we're going to use is the 60.2975. I'm not saying go short 60.2975. I'm saying that's the target. Take a look at what patterns are present there. We're in bar number 7 now, but we have to take out the recent high from 7:50 this morning even to possibly get to a TD9 count pattern. If we look at the other time frame charts out here, I don't have anything else at the moment. So it's really about the short-term time frame. On a daily time frame, if we were to get a bearish reversal candle, that would then trigger a sell the D point top out there, which is really what we got yesterday inside the NQ. So let me put up the NQ charts out here so we can take a look at those. Okay, that wasn't good. Let's see if Stevie can keep his fat fingers working here. Perfect. Okay, so if I'm going to open up the daily chart, I don't know if it's going to open with it. Yeah. So if we take a look at the daily time frame chart, yesterday, so what's the A to B equals CD pattern out here? Let me just draw that in so everybody can see that. And we're going to go to the most recent low out here. That takes us back into the August lows out there. So we're going to get our line tool. We're just simply going to go from that low, or approximately that low, up to its TD9 count top. That TD9 count top back in the late August area. So that's our A to B point. Now all we have to do is go take a look at the first copy and paste, and then we're going to assemble. And how we're going to assemble is we're then looking for the lowest low that takes place after that B point, after that high. So there you go. Now you can see we were at the 1-to-1 price objective. We were at the TD9 count breakdown level, 21,237.75. And yesterday was a key reversal candle. So a key reversal candle needs three things. The first thing is you've got to exceed, well, first you've got to be in extended condition. We're at the top of an A to B equals CD. That's an extended condition. The second thing, you have to exceed the prior day's high. And what would it be? It's not exceeding, but you have to at least trade below yesterday's low. What is that? It's not exceeding. There's got to be a word there. And Stevie's just totally dumbfounded and blank on that one. But it was also a bearish engulfing candle. Now, pretty easy to become a bearish engulfing candle yesterday. Why? Because the prior session was a doji candle. So almost all you had to do was pretty much finish lower out there. So we do have a sell the D point top. Now, we don't have that pattern inside the ES, the NQ, or the Russell 2000. It's just the NQ. But it does bode paying attention. Now, that signal would get negated if we were to see a close above yesterday's high. So you want to note that on your pad of paper as well, 21,340.75. So what price should do on a daily time frame is pull back to its oscillator and change line around 29.17. Well, if it's going to do that, we should see tops in the intraday charts, or some of the intraday charts. We should see support levels fail. The problem here is I don't have my profiles, although I do know across that top screen, the 195, the 130 time frame. Oh, that's right. I'm using some different. Oh, shoot, I've got this on the wrong page, really. That's what I use for the stocks and so forth, those time frames. So I apologize. Give me 1 second. I want to get back here. Okay, so good. We've got the NQ up here. It just needs to populate these charts. Now, along the top here, the 5-hour, the 4-hour, and the 2-hour, I do know that each of those are trading with inside their profile. So that much I know. How do I know that? Because when I was assembling the newsletter this morning, I had all the profiles that were working at that stage. So now we take a look at intraday charts out here. We don't have the same pattern. We don't have a 10-minute Rhodes Momentum Indicator bottom signal out there, or a TD9 count. I don't think we do. Let me just, doesn't look right. There we go. We do. Sorry about that. Okay, so when these charts updated, again, just some technical difficulties, but Stevie's going to sludge through this, and I'm going to give you great information. So let's take a look at this 10-minute chart here. Again, TD9 count bottom, forming at the 5:30 time frame, completing at the following bar, 5:40. Now, what do we have here? Again, we did that wave number 4, letter D. Price pulls back, tests and rejects the oscillator chain. And folks, you should want to learn these tools out here. Basil's tools, Stevie's tools, Larry's tools out there. They really can help you understand what's going on for each of the different time frames that you trade. So here, what we can see is that price should go target the 21,232 level. That's its TD9 count breakdown level. As we get up there, it may in fact form a TD9 count top. And if it does, that would be a signal to go ahead and take a short-term short position, with that oscillator and change line being the first target to the downside. So that was a 10-minute chart out there. Now I just need to do this in order to see if I've just got it. It's just not picking up all the tools. I don't know the reasons why, but what we're going to do is we're just simply going to repopulate those. It's not picking up the TD9 count patterns, which is what I want to be able to do. Oh, okay, great. Boy, it really wasn't picking stuff up. One more minute here to do this, and that's perfect. And then I'll do the same thing on the daily time frame. Okay, so we're looking on the 5-hour, 4-hour, 2-hour chart. No bottom patterns per se out here on a 60-minute time frame chart. Let's open this up. What do we have here? We really don't have anything. What we do have on the 60-minute time frame is price pulling back to its breakout level. So there was a TD9 count and a Rhodes Momentum Indicator top here on the 60-minute time frame chart. It was that Rhodes Momentum Indicator top that formed here at was earlier this morning. It was at 9 o'clock. I'm sorry. It was at 9 o'clock. 9 o'clock yesterday morning. Okay. So 9 o'clock yesterday morning on the hourly chart, what price did was it pulled back to that breakout level. Part of the TD9 count system. I teach you that. Go subscribe for 30 days, 29 days. It doesn't cost you anything other than putting down a credit card to get a great education on these tools out here. And if we take a look at what recently took place here at 6 o'clock this morning, while the 10-minute time frame chart was forming that bottom signal, the 60-minute time frame chart was testing and rejecting its breakout level with a nice hammer candle. So because you've got that hammer candle, if price were to close below that on a 60-minute time frame, it being 128.50, that'd be your signal that price is going to go ahead lower out there. You'd have a new A to B equals CD pattern likely forming to the downside. But your price target, I would say, would be this next breakout level at 29.24. So that was the ES and the NQ out there. We do have a few questions that have come in. Joe wants to take a look at natural gas. He's asking for resistance. Oh, that could be hard without the profiles. We're also going to look at AGQ and then some Bitcoin targets for V. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
For doing that. We'll make this show as pertinent as we can for you for the 11 to noon time frame. By the way, tomorrow I will be unable to host a show tomorrow or Friday of this week. Right now, you've got U.S. equity futures mix. You got the Dow that's up 68, S&P's off 6, NASDAQ is down 12, and the Russell's off 14. We're taking a look at the charts here for. Actually, let's go back. Let's do this in order. We're going to take a look at the charts here for Joe. Joe wanted to take a look at natural gas. His question is, where is resistance out here? So first, let's take a look at the daily time frame chart, which has an A to B equals CD pattern. It was able to attain the 1-to-1 level yesterday. So I'll draw that in here. Formed a nice Rhodes momentum indicator bottom back on November 14th. That's the A point. B point was the following day. We're going to copy. We're going to paste. And now we're going to go ahead and assemble. And so there you can see that the A to B equals CD pattern was hit yesterday. And right now we're pulling back. Now, what I don't have out here for you, Joe, at the moment is a profile level. So what I can't share with you is where those profile levels are to identify support. So what we're going to use is, I'd have to say your support level would be the oscillator and change line right now. And that's at 275. But you could get a bearish reversal candle. And if you get a bearish reversal candle today, that would then suggest that we could pull back and actually test the November 4th low. So what you'll be watching today, and I'm not saying that natural gas is going to do this, but it could do this, and it could close inside that swing point from the 14th. So you want to watch that high of 2.795. Of course, if it does that, you're going to get a bearish reversal candle as well out there, and then that says that oscillator and change line would really be the level of potential support. If price closes below that, that would then suggest getting all the way back to its lows. Now, is that a possibility, getting all the way back to those lows? Stevie would argue yes. Why would Stevie argue yes? The reason I would argue yes is if we take a look at the monthly time frame chart out here, the monthly time frame chart confirmed a TD9 count bottom pattern in August. The low of that pattern was 2.758. Last month, we closed at 2.707. So we negated that signal out there. We do not have any kind of a bottom signal. The monthly time frame is saying, yeah, natural gas could even trade lower out there, believe it or not. On a weekly time frame, I do not have a bottom pattern. The weekly Rhodes momentum indicator bottom was negated 2 weeks ago. Last week, obviously, we traded a bit lower. So I don't know that the weekly chart is suggest. So it's really up to the daily. You've got that sell the D. Well, you have a to B equals CD pattern. If you get a bearish reversal candle, you'll have a sell the D point. What else can Stevie do out here? You know what I can do? Let me get an intraday chart. So this just give me a moment because I don't have this already pictured. Natural gas. I don't need to do the 12-24. So what I want to do is I want to get a 30-minute time frame chart out here. And so sorry that I've got to get that going. How many days? Give me about 25 days worth of data. And then voila, in a moment I will have that 30-minute time frame chart. And I've got to do one more thing. I've got to take the profiles off of it. So if you give me just a second. Sorry that I can't. Oh, come on, populate. Shoot, here, see, here's what I'm looking at. This is what I've got to do. So all my charts have got the profiles on them. See how they're all at 0? So everything is basically readable until we simply get rid of those profiles, which really made it complicated this morning when I was getting the charts and everything set up for the show. So on a 30-minute time frame, let's take a look at this and see what kind of pattern we have. So on a 30-minute basis, this is great. You've got a TD9 count top, Rhodes momentum indicator top out here. Those formed at 11:30 and 10:30. Looks like yesterday. No, yesterday on the 11th. So your next level of support is going to be at the 2.829 level. If you close below 2, and that's the TD9 count breakout level for its 30-minute time frame. Price closes below that, well, then you're headed lower as well. So that's the minimum information that I can give you, or really for me, it's the maximum information that I can give you at this moment in time here. If you take a look at natural gas from a yearly, I said that, then what do? I open up another chart. If you take a look at the yearly chart here for natural gas, continuous contract, we're going to be down for its 3rd year in a row. But on a yearly basis, we've seen natural gas trade lower for 7 consecutive years out there. How about that? How about that yearly chart for natural gas? Pretty crazy. Okay, so let's move on to, so Joe, I hope that helped you out. It was the best that Stevie could do in this circumstance. You also wanted to take a look at AGQ. So let's go pull up AGQ. And AGQ, you're looking for a long position. So today, AGQ is going to go ahead and, well, it's going to likely. Let me tell you what it needs to do today. So you may be getting the bottom pattern today, and that's the TD9 count. And you had bar number 8 yesterday. So far, that's low of the pattern, so that's a good thing. 80 to 90% of the time that you get a valid TD bar number 8 of a TD9 count, whether it's at the high or the low, they do turn into TD9 counts. However, that being said, I don't know what price is going to do today. What it needs to do in order to confirm a TD9 count pattern, Joe, is it needs to close today below 39.83. 39.83. If you get a close below 39.83, you'll then have a confirmed TD9 count, and that says the bottom could either be in today or it could be in tomorrow. So depending on whether this trades lower or not, or trades higher, as long as it forms that TD9 count pattern, you would have your bottom signal. You said you were looking for a long position, so beautiful time to write in. Whatever the low of the TD9 count pattern is, let's assume that it forms out there. If you get a close below the low of the pattern, what you likely should do, because I don't have any profile levels out here to assist us, is close that position out, because it could be signaling to you and I an A to B equals CD pattern to the downside. It could be signaling that it moves back to 31.56 out there. So all those things are in place. Now, the B point of an A to B equals CD, I'm assuming that's close to a 0.382 retracement. The volume on that, so the swing point that we're looking at is November 6th, 2.2 million shares yesterday, taking out 1.4. So, not a confirmed A to B equals CD pattern, at least at this stage of the game out there. But it looks more like you're going to get a TD9 count bottom pattern for the daily time frame. If I look at the intraday charts just to see were there any intraday signals, well, it turns out that on a 65-minute time frame you have a formed TD9 count bottom. So the answer there is yes. 130-minute time frame needs a bullish reversal candle to confirm a bottom. The 195-minute time frame chart did. You had a nice bullish engulfing candle. TD9 count on the 30-minute. You're going to get to a TD9 count. Well, I don't know if it's going to rally or not. You may get a 30-minute TD9 count top and then a bit of a pullback. So you could consider laddering in on a position out there. And so you're getting all the signals that you wanted, even on a 5-minute base. Let me see what we have out there. Yep, you even had a 5-minute bottom inside of AGQ. So it does look like to Stevie at this point. Well, here's what the charts are telling us. The message of the markets, the intraday charts are confirming that a TD9 count bottom pattern is in out there. So, Joe, great timing for that question, and just use normal position sizing. If you don't know what that is, again, go ahead and subscribe to Mastering Probability. I've got a workshop in on that, and that is really the most important thing in trading is proper position sizing out there. Let's go take a look at our next request. We'll do this when we come back to the break, and that's going to be we're going to take a look at Bitcoin. We're going to try to come up with some targets out there, and that is for V. That's all I had in the email. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Stevie's got another problem out here. So this one is going to be... I'm not going to worry about it at this moment in time. So we're going to take a look at Bitcoin out here, and this is coming in from came in by email. Came in from somebody's email address that started with a V out there. So if we take a look at the daily time frame, you're looking for price targets. So first, let's open this chart up, the daily time frame that is. Let's try to get a picture of what it's communicating to you now. Now I'm just using a continuous contract here. I didn't really need to do that. I realized I didn't have the weekly on this, but first, let's take a look at the pattern. So we can see that yesterday, it really was before yesterday. This has been in wave number 7 since the trading day of November the 6th out there. If we get a lower high tomorrow, this will confirm a wave number 7 top. And what that would then suggest on the daily time frame, the target would be to the downside, and the target would be its oscillator and change line. V that is currently printed at 77,910. That number is going to change as price moves up and down out there. Is there any other pattern? Yeah, I can come up with, you get a bearish reversal candle today. That would then generate a sell the D point top. And that's coming off of the low of August 5th. That would be the A point. I would use the high of September 27th as your B point, and the retracement coming down to October 10th. Looks like about a 0.382 retracement led to maybe a 1.618 A to B equals CD, or maybe a 1 to 2 A to B equals CD pattern to the top. So now we've got to take a look at the intraday chart, see if there's any kind of topping patterns. Well, it turns out the 5-hour time frame chart has a TD9 count top. It's completing at 9 o'clock, so in about 15 minutes out there. What you want to watch here during the day now is it's a support level of 85,572 or thereabouts. Remember, price is going to go up and down just a tad. If price were to close below that, 1, we know we've got a top. 2, we know that it would have lost its momentum for the 5-hour time frame. Price target to the downside being 76.225. Now, the daily time frame price target of that oscillator change line would come into play first. If we look at the 240-minute time frame, TD9 count top, price testing the oscillator and change line right now. We're printed at 86,560, the oscillator and change line 86,554. Again, it closed below that on a 4-hour time frame. The current bar out here right now, give me a moment. This is going to complete at 10 a.m. A TD9 count, no, you don't have a TD9 count top. It was negated on the 2-hour chart. But support out here is 81,865. No confirmed top yet on the 60-minute time frame. You've got on the 30-minute time frame, looks like this is taking on a hammer candle. That hammer candle, if you get a close below This is at 6 a.m. this morning. If you get a close below 86,245, that's actually going to trigger an A to B equals CD pattern to the downside. We'll go ahead and draw that in here. So your A point is that high out there. Your B point is this little hammer candle that came in at 6 this morning. I'm just simply, in this case here, just simply going to move that to the C point. So this would say you get an A to, if it closes below, again, that hammer candle at 6 a.m., then you get an A to B equals CD pattern to the downside. Initial price projection in the 84,130-ish area, but 82,220 would be wide open out there. So what it looks like, I know you're looking for price projection levels, I suppose, to the upside out there, but everything that we're getting right now is suggesting, hey, we should be looking at downside price targets out there. The 15-minute time frame chart. You know what? Let's watch the 10-minute time frame chart. Why is that? Because a 10-minute time frame chart will go ahead and complete a TD9 count bottom pattern in about 3.5 minutes at 8:50. So you have that pattern completed. So the nice thing there is if you get a close below the low, which is currently 85,930, let's assume that's a low of this pattern out here, then that's going to suggest that you are off to the race, that you're moving lower, that you're just simply moving lower, which is really what's coming from those longer-term time frames. So now we're just looking at a short-term time frame that you can take a look at to help you identify whether that is going to unfold, that being lower price, because we are sitting at that 4-hour time frame at a key level of support. So those are your Bitcoin targets, V, right now today. They are to the downside. I hope that helps you out and everybody else as well. Let's go take a look at the 30-year Treasury. 30-year Treasury out here. Oh, let me just take a look at one thing here. I think what's happening is, yeah, see, they're both yellow. That's the issue. I was changing one screen and it was applying to both screens, and I'm not going to mess with that at this moment in time, not with less than 15 minutes to go. But let me go back to the 30-year, and then, Dan, I'll get to the IBRX. There's no reason for us to not go ahead and cover that. So the first question was, the next question, I should say, from YOY inside the Tiger's Den, is the daily time frame, has the daily time frame from the 30-year Treasury formed a bottom? And my answer to that is no. And the reason it's no is because we don't have a bullish reversal candle to confirm a Rhodes momentum indicator bottom pattern. Now, that doesn't mean that it hasn't bottomed. Why? It just means that Stevie does not have a bottom pattern. I think that's really the question that you were asking. Yes, prices trade above its red oscillator and change line. What we do know here from memory is that these highs out here in the 118-ish level, 118 towards 119, those levels are at about the center of its bearish structure daily profile. Not until price closes above that will we get any type of bottom signal that says, okay, a rally or counter trend move up to the 128 level. We do not have a bottom pattern on the weekly time frame. We most certainly do not have that on the monthly time frame either out there. So I do not believe that it has bottomed at all. If I look at a 30-minute time frame chart here for natural gas for its December contract, it formed a TD9 count top out here, and now what price should do is pull back to that 2.829. Did I already cover? How about on natural gas? Oh, I know why. I didn't. Sorry about that. Good Lord. Okay. So now we've got the 30-year on the 30-minute time frame. On a 30-minute time frame, we've got a negated TD9 count bottom. That TD9 count bottom took place at 5:30 this morning out here, and so yeah, just suggesting that we're headed lower. Now there's an A to B equals CD pattern to the downside. That price projection, let's see if we can come up with that for you. Darn it. Here we go. So we're drawing in the A to B line. I'm just simply going to move that over to the C point out here. That's the highest high after that B point. I'm going to try to do this. Okay, so there's your 1-to-1 thereabouts. I'm just going to leave it right there. So that says we get down to about the 116.30 type level on the 30. That's where the 1-to-1 would come to an end. That does not mean that's where price would stop. But why? Oh, why? The answer that Stevie will give you is my charts do not show any kind of a bottom pattern on the daily time frame for the 30-year Treasury. Now let's go take a, well, we're going to get over to the charts. Now we're going to go take a look at it, which is ticker symbol IBRX. Now I realize what I did this morning when I was putting all this together. Let me go see if those profiles are back up yet. Oh, shoot, that's not it. Yeah, I know. Don't hit that button. Ah, they are back up and running. Okay, now that's a beautiful thing. So, Dano, let's do this here. Let's actually move off to a different set of charts here. Well, I tell you what, we're about to go to a break, but let's just take a look at these charts here, and then we'll do the full set with profiles. Thank goodness. And then, so on the daily time frame, we got price testing, oscillator and change line support at 532. The 60-minute TD9 count top found support at 514. So it's worked to the downside, has been done. 15-minute time frame chart looks like it may open and form a TD9 count top. We don't know until we see how it opens up there. But Dan, what I'm going to do, and everybody else, thankfully Stevie's got the profiles now back up and running. I'm going to switch over, and we'll take a look at this set of charts here to give Dan a better view. Be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Welcome back, folks. Now we got the IBRX charts up on our screen out here. Dan, they are trading with inside their daily profile. They're trading above their green oscillator and change line. They're trading with inside that bullish structured profile. 584 is the key number. That's the center of that bullish structured profile in the daily time frame. And if pricing closes above that, that would be signaling to you and I that price wants to move up to 707 out there. Your other resistance is at 671. 671 is a TD9 count breakdown level on the weekly time frame out there. And then you also have profile resistance on the monthly time time frame. That held last month, and that's up at the 581 level. So those are the key areas for you to be watching on IBRX. Mr. Z writes in and says, is there any chance that we have made a significant high out there? I'm paraphrasing just a tad. And the answer to that question, John, I'd have to say is no. And the reason I have to say no is because if we look at the weekly time frame charts out here, last week, the Dow Jones negated a Rhodes Momentum Indicator top and a TD9 count top, says it wants higher price. Same with the S&P 500. Same with the NDX. Same with the Russell 2000. The semis, they're a problem out here. They have not been able to get above their green oscillating change on a 5309. Transports want higher price. The NASDAQ composite did and will complete a TD9 count top this week, but none of the other charts are suggesting that. And the New York Stock Exchange negated its TD9 count top last week. So what this is suggesting to Stevie is that the Santa Claus rally is here. Now, if the daily time frame charts form bearish reversal candles, much like the NQ did yesterday, then no, I can't show you that. Not that I don't want to, but I can't show you that. Let me do this. So my answer at this moment in time is no. If we get bearish reversal candles on the daily time frame, we'll come back and take a look at that. Lastly, let's go out of here taking a look at, where is it? Right here. Let's take a Goldilocks. Goldilocks is going to go ahead and form a TD9 count bottom pattern today. Complete that pattern tomorrow. 5-hour time frame chart as a TD9 count bottom in place. May form a Rhodes Momentum Indicator bottom. We got lots of intraday bottom signals out here. And the 15-minute chart negated a TD9 count top. That suggests we ought to rally up towards 26.25 next, 26.29. Folks, stay tuned. Basil Chapman's going to be filling in for Tommy O'Brien today, and I'll be back with you on Thursday. So have a terrific Tuesday, and I look forward to seeing you again soon. Take care now.